Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Monday, March 16th. Well, hopefully you got my weekly wrap. I wrote it uh, Sunday morning before anybody knew which way we were going to go. Obviously, this is all being driven by the events in the Mideast, the bombing of that island. A lot of people thought might have taken us even higher. Um, at the end of the day, what matters most is what the price is. It's not what someone's opinion is on radio or TV, right? Mine included. Uh, to see beans down 48 cents from their high last week, got to remember spot beans traded 12.38. Last night we traded 11.89. That's a haircut, but it's not a complete collapse. I mean, we're still at 11.92. We're near $12. Back at January, we were down at 10.50. So okay, you may have left 40 or 50 cents on the table, but you still have that risk all the way down to 10.50. So why risk $1.40, right? So if you've done nothing yet, great. You missed the top. It's still not too late to do something. Okay, let's just get that right out there right now. A big part of this rally was driven by speculators. Everybody loves to hate the speculators when prices are lower. They forget to thank them when prices are higher. You had the funds add 140,000 new long bets in corn last week alone. Um, so now they're long corn beans. They're still short a little bit of Chicago wheat, but they had flipped and gotten long Kansas City and Minneapolis. So money's pouring in on the long side. Um, take advantage of it. And that's what I've been trying to have clients do. Um, not you're not calling a top, setting a hedge, making a cash sale. It's not calling a top. It's rewarding a gift of a rally because you know 3 months ago in December things were looking pretty dismal, right? We were at contract lows in wheat, 5-year lows in wheat, and we've had this good recovery. So, um, especially in new crop, I'm going to talk about that real quick. Then I'll let you go. New crop corn is still at 4.88. It's only down 3 cents. New crop beans still at 11.50, only down 12 cents from Friday's settlement. So that's still a relatively awesome price compared with the fact that back in January, new crop beans were at 10.50. So you're still $1 off the bottom. So that's my point this morning. If you haven't missed everything, don't throw your hands up and don't uh, don't knock the whole board table. Don't knock all the playing cards off. Don't get up in a huff. It's the first shot across the bow. It's going to be a long marketing year. These are still relatively good prices. So get after it if you haven't done anything. Nobody sells the top. Only people who say they do that are as my grandmother used to say, they're fibbing. Fibbing. Crude oil. A lot of people thought, myself included, there was a possibility we'd blow through 120 and go back to the 2008 all-time high at 146. Certainly felt that way Saturday when we woke up to what had happened in Iran. So to see us at $95, that to me is more important than anything. What Mr. Market says is way more important than what anybody like myself says, or anybody on Twitter, or anybody on television, or any politician. The market is what matters, and that's what we're here to watch and try to hedge. Even diesel fuel is down 3 cents, right? I'm looking at unleaded gas, RBOB. It's sitting there, it's down a penny. So something to watch, and we'll see today. The stock market, well, it's up 372 points. I had did a chart on the stock market for the weekly wrap up. And I talked about the fact that we were only down 6.5%. But if you look at the stock market, this time last year in April, right, we were at a 2-year low. Between April and January, right, to the all-time high, we had rallied 45% in the S&P. So you cannot rally 45% in 11 months and then hyperventilate and vomit when we have a 6.5% correction. Sorry. I know it's fun for the TV people to do, but it's really, I think it's irresponsible, right? Because not every correction is the beginning of a 2008 great financial crisis. And I went back and I did the math from 2007 to 2009, from the top of the S&P to the bottom of the S&P. The bottom of the S&P on '09 was 666. That break was 58% from the top of the previous October high in 2007. So that's a real uh, disaster. 6.5% is not. Okay. So take that all with a grain of salt. Even 10% or 20%, like I said, you've got to look at it from the perspective of we just rallied 45% in 11 months. So I think that's going to be the big driver today with cattle. The stock market's higher. The S&P's up 70 bucks. The Dow's up 390. Remember, a 1% move and the Dow's at 50,000 is basically 450 or 500 points. 1% moves anything really 5% or less is noise. So even if we were to have multiple 2,500 point swings in the Dow, I know it's exciting and scary, but it's just a percentage move. I think that's what's going to impact cattle today. We'll see if there's any news out of Greeley about the potential strike there or not. A lot of people seem to think that despite that, there's plenty of capacity out there. The Packers are finally back in the black. So if that's the case, then we'll see. We did have a little bit lower cash trade last week. We have had a pretty technical correction in cattle already after the large recovery rally we had. We gave back roughly 38%, give or take. We did have our lowest trade of the year uh, for cattle on Friday. A lot of people didn't notice that. I did that in my noticed that in my letter. I put it out there for you. So possibly this market is going to reprice here. I think the number one thing I'd watch though is what happens in the stock market for cattle. The stock market's higher. I think that's one positive, and we'll see how we trade today. So hopefully all my information helps you. If you're looking for help, 312-638-8868. If you're not getting my letter, take a look at it. Robinson Ag Marketing. If you need help today, give me a call, 312-638-8868. Take care.